Hello from Moted Markets. This is Ahuro and will be with you to review the US personal income and spending data and market reactions. First of all, let's check the data and then we can see how market can react to this data. Before checking the US information, I have to mention that earlier today we had inflation data from Japan as well. The Tokyo's inflation core CPI increased by 2.4% in March, and the headline CPI increased by 2.9%, both of them above the previous month. In UK, we had retail sales data and retail sales data for February and GDP reports for fourth quarter 2024. Generally, overall data showed that the UK inflation still improving lower than expected, and even thought it's better than expected, but lower than previous months. Actually, better we say that. The growing is slow, and which means that the central bank, the BOE, can continue or can restart the rate cut for the next meeting. In France, we had inflation data lower than expected. In Spain as well, the inflation was lower to 2.3% from 3% printed in February. Actually, they were the primary numbers. The focus today somehow was on the US inflation numbers. US personal income and spending data showed that the core PCE price index increased by 0.4% on the monthly scale in February. It was better and higher than 0.3% expected in the previous months. The headline inflation also increased by 0.3% in line with expectations, but still it's increased by 0.3%. I mean, it's like third or fourth month in a row that it's increasing at the same with the same pace. The thing is that on the annual scale, the core inflation increased to 2.8%. Above 2.7% expected and 2.7% in the previous month, which it was revised up from 2.6%. So the core inflation in January, actually, also it was 2.6%, not the 2.7%, not the 2.6% initial estimates. So, and while the core inflation is higher than expected and above and higher than previous months, at the same time, we have increasing we have the income increasing as well. The income and spending, both of them, like the income increased by 0.8% on the monthly scale, much higher than 0.4% expected. After that, in January, we had 0.9% in initial estimates, and which revised lower to 0.7%, increasing the income in January, which was a surprise by itself. This month, we are expecting to see a 0.4% increase in the income, but again, the income increased by 0.8%, which means the Americans have more income and they have more ability to buy. They have more purchasing power. So, but the spending increased. The spending also increased by 0.4% after a 0.3% fall in January. In February, we're expecting to see the 0.5%, but it increased 0.4%. Yeah, it's lower than 0.1%, lower than estimates, but generally it's increased, which means that the Americans consumers, they have good income and they are spending their money. So we can say that the central bank and the Federal Reserve and the government, they will have more challenging days and months actually to lower or to control and lower this inflation. Don't forget that the new administration policies also, it's expected to support and increase the inflation at least in the short term. It's inflationary in the longer term, but in the short term it's inflationary. But at the same time, it can increase the American income as well. But generally, it's inflationary. So while we are talking about the possible inflationary policies, the higher inflation also can increase the idea of, support the idea of higher for longer. So that's why you're expecting now to, to have still 2 rate cuts this year, later this year, and not more than 2 rate cuts. And we are not expecting the 3 cuts. These data can support the idea of higher or stronger US dollar for longer. So which means that now we expect to see the US dollar, based on this data, we expect to see the US dollar to stop it's lowering trend of which started from yesterday morning. So now we can expect the US dollar to have a side movement or move slightly between 103.60 and 104.30. So so these data is generally supporting the US dollar, and they are supporting for the dollar power. At the same time, since we are expecting to see the the interest rates for longer in the higher levels, which means that's negative news for the stock market. So we can expect to see the stocks, S&P 500, Nasdaq, and Dow Jones, all of them to close lower this weekend. We end the week with the lower levels, and with the losing. So generally, these data, they are negative for the stock markets, and we can expect a continuing pressure on the stock markets and all the main indexes. At the same time, it can be positive for gold. I mean, I haven't thought, yeah, in the short term, maybe it's one, but generally, these data means that the money is flowing out from the stock markets, and they're gonna look for the safe haven. I haven't thought if we have the short correction, maybe even towards these levels around 2005, 3000, sorry, $50,050. But generally, we are still in an uptrend, and that can continue further, and still we are positive about the gold. But about the oil, stronger US dollar may slow down may put the pressure on the gold, on the stronger expected dollar may put the pressure on the oil price. But at the same time, the oil price will be mostly affected by the geopolitical tensions at these days, as the market doesn't have too much changes in the demand and supply numbers. So generally, we are natural about the oil price. We are positive about the gold and US dollar index. We are negative about the stock markets. We expect to pull all US 500, Nasdaq, and Dow Jones, S&P 500, and Nasdaq, and Dow Jones to end the week lower. This is generally the data and our expectation. The same negative reactions also we expect to see from the Bitcoin, especially the Bitcoin, which is already pessimist from news from the White House. So generally, we are not positive about the cryptocurrencies as well. The Bitcoin can continue its pressure lower, same as the stock markets. Generally, that was the data and market reactions. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye.